In the last 18 months, interest rates have had a lot of buyers freaking out. But here's the truth. Buyers are still buying homes. And even in today's market, they're still doing it the smart way. Let's take a look today at some of the best ways to approach this market so that you're putting yourself in a great position in the future to sell and negotiating the features and benefits that you want to see in your home today. Every single week, I hear the exact same thing. I'm going to wait until the interest rates come down. Here's the problem with that. When the rates drop, more buyers rush into the market. This can oftentimes put prices up a little bit higher. It can have more competition for the homes that you're actually interested in, and it can put you in a position where you're competing against a lot of other offers. I mean, that competition gets much, much more fierce. The key, though, is knowing how to buy smart so you can still win in this market. Let's take a look at some of the strategies that we can employ to get the best deal in a high interest rate market. Number one on the list is interest rate buy downs. Many lenders will let you pay a lump sum up front to bring down the cost of your mortgage over the 30-year period. And if you plan on being in the house long term, this might be a great strategy to make it more affordable over the long run. Many of the builders that we work with today also offer an incentive in buying your rate down to help make their product a little bit more affordable, especially if they're competing against used homes in the market. Who wouldn't want to buy a new if the interest rate buy down brings the price right in alignment with the used home? A lot of people are making that choice here in West Michigan. The second thing that we're looking at today is a lot of adjustable rate mortgages. Especially if you don't plan on staying over the long term, adjustable rate mortgages might be a great tool for this kind of market. With adjustable rate mortgages, you get usually a fixed period of time at the lower rate until the rate starts to adjust. So if you're only going to be in the home for a few years, this might be a product that makes sense for you. If you're saying to me though, hey Nick, I might be here 15, 20 years, this might not be the best choice because oftentimes there's a range for that adjustment and you may even end up with a higher than market rate price over the period of time that adjusts in your time in the home. Number three, and this is one that I've been using to help buyers for the last 25 years, it's seller concessions. As the market starts to change and there's less competition in a higher interest rate market, we're so often able to get the sellers to give a concession. We even just had one where the concessions came in a negotiation after inspection. And what this actually allows the buyers to do is to put less money out of pocket at the very beginning so that ultimately they can be in a position where they have money to do renovations or make changes or just simply keep in reserve at the time of closing versus paying all of their costs themselves. It can be a great way to negotiate when $10,000 in costs might be $60 to $70 a month versus $10,000 directly out of your pocket in the moment. Next is focusing on the monthly payment versus the entirety of the loan. Over the long term, it might make more sense, or you might even be able to actually afford more home than you think by really focusing on the monthly payment. You know, the difference between 7 and 6% rate on a lot of homes in our area only comes down to $65, $75 a month. And of course, a lot of that is tax deductible. While some people might start to get fixated on the set price, oftentimes we have to look at, is the monthly payment in alignment with the features and the benefits that we want out of the next home we buy? For a lot of buyers, it absolutely can be, and it might make sense to stretch a little bit, even in a high interest rate environment, as long as that monthly payment makes sense. Remember, if you're living in it, your mortgage interest is also a tax deduction. So even if you're paying a little bit more in that mortgage interest in the short term, you are going to be able to write it off at that stage. Number 5 that we want to consider is the equity opportunity when rates drop. Here in West Michigan, over the last year, we haven't had amazing appreciation, but we have appreciated at about 2.5%. So if you've been sitting on the sidelines, if you've been paying money to a landlord, that money is just gone. Whereas you would have appreciated typically at a 2.5% rate over the past 12 months. Still in a positive direction at this stage. And when rates come down, oftentimes that will shoot the value up. But if you're like, hey Nick, I don't care, I want to be in this house, I'm not super concerned with selling it and tapping my equity, great. Then you always can be in the position to refinance when rates come down and just simply be into a lower payment, typically fixed for the next 30 years. It might be the right strategy for you, depending on your situation. As a local realtor here in West Michigan, I'm working with buyers every single day who are winning in this kind of market. The strategies are out there. You might just need someone to help guide you through the process and show you some of the best choices given your current situation. So if you've been holding off because of the rates, let's talk. There's a great chance that we can find something that fits you, your family, your needs, and puts you in a great financial position going forward. Whether it's monthly payment based or the total investment of the appreciation you're going to make in the future, there is a right home out there for you. And I specialize in helping buyers find the home that fits them. So if you have questions, let's connect. You can get a hold of me with my contact information that's in the description below. And I'll see you guys on the next video.